everyone to the webinar. In this educational webinar, HRlogics and Aqore will explore how unemployment claims management works specifically within the staffing industry and why many agencies don't realize they're exposed until tax rate notices arrive. So let's take a minute to review a few housekeeping rules. You're all muted. However, if you look at your Zoom bar, you should see a Q&A button. I went a little too far. I always do that. We'll get to all the questions at the end of the call, but don't wait to put your questions in the chat. The sooner you input them, the better chances they'll be asked on the call today. All webinars are hosted in the HRlogics News and Resource section on our website. You can scan the QR code on the current slide that will take you directly there. Additionally, you'll find educational blog posts on hrlogics.com/blog or simply scan the QR code on the right to bring you directly into all recent articles posted. Make sure you also follow HRlogics on LinkedIn so you'll be in the know as soon as a new article is posted or about future events just like this one. So let's take a moment to introduce our speakers before we get into who HRlogics and Aqore are. Josh, I will hand it off to you first. Who are you? How long have you been doing UCM? And what do you hope our attendees will take away from the presentation today?
Well, hey everybody, welcome. My name's Josh Kendall. I'm the Chief Operating Officer here at HRlogics on our unemployment division. I've been in the unemployment space since 2004, so going on 23 years now. Every one of those years on the TPA side of things, working at various TPAs in our industry and supporting our clients in all things unemployment related, from claims to hearings to tax management, mergers and acquisitions, etc. So excited to share some information with everybody today.
Great. Thanks so much, Josh. Thanks for being here. And apologies if you guys start hearing my dog snoring in the background. Josh, you're already making her fall asleep. Just kidding. Steve, how about you?
That's
You wouldn't mind.
fantastic. All right. So Josh got to put out those years of experience, so I'm not that afraid now to put that out there. So I have over 23 years of experience in the staffing side of the business too. So I'm Steve Zipparro, Chief Revenue Officer here at Aqore. About 97% of this audience today, by the way, are Aqore Zenopal users, which is fantastic. So I'm here today to support the integration partner that we have with HRlogics, but just an understanding, I come from the staffing side as well, owned and operated my own staffing firm. I did everything from sales, recruiting, obviously the operations, and to choosing different types of software. So I'm now here with Aqore, which we're a front to back solution, which many of you know.
Awesome. As for me, I'm Elizabeth Williams, otherwise known as Biz, and I'm the Chief Revenue Officer at HRlogics, co-founder of Rise Credits, and your host for today's session. So for those who are new or unfamiliar with HRlogics, let me take a minute to introduce you. At HRlogics, we simplify the time-sensitive tasks that drain HR and payroll teams, like managing unemployment claims, completing I-9s, handling employment and wage verifications, and securing tax credits. We bring the tools, expertise, and strategic insight to save companies time, reduce risk, and uncover real savings, often in places they didn't know where to look. With our powerful tech and industry-leading experts, we don't just manage compliance, we monetize it. So, Steve, what should our listeners know about Aqore?
So about Aqore, we are a complete front to back solution for staffing firms. So everything from your applicant tracking to your CRM tools for your sales team, all the way through your timekeeping to back office for your payroll processing as well as your invoicing. We are AI powered, so we have several new AI tools, plus we have AI agents coming in. But the whole simplification of keeping everything in one spot, and when I describe this to people, they kind of look at it like we've heard this before, that you're a front to back solution. But truly the biggest differentiator is it is one platform where you're signing on to one spot, not multiple logins, so that your workflows are truly cleanly and seamlessly all together, making the opportunity and processes easier for your internal staff as well as your external staff.
Josh,
All
gonna hand it
right.
back to you for 2026 updates.
Yeah, so few updates just for 2026 related to state and unemployment tax rate increases. You'll see there in our first bullet, there are still a couple of states with current Title 12 loans out there from the federal government, which are then imposed in FUTA credits. Actually, I think just last week, the U.S. Virgin Islands may have paid theirs off. I've not received official confirmation on that yet, but if they have, then that you can take that one off the list. But the big one that everybody wants to know about is California. And no, they have not paid theirs off. And no, they likely never will. Just kidding. They will at some point. But what that means to you all is while that Title 12 loans remains outstanding, the federal unemployment tax rate for all of your employees in the state of California will continue to creep up every year at 0.3%. So you'll see there, based on 2025 numbers, you're now at $126 per employee versus the $42 per employee at the minimum or standard rate. What does that really mean ultimately? Well, it just means you're paying more in tax dollars, right? And as we all know, that impacts the bottom line of every company, whether they like it or not. So, hopefully we're going to see some change there. It's been a long time coming since COVID that California has made any movement there. And to be frank, there's no legislation currently on table to deal with the Title 12 outstanding loan, but we'll see how that goes. As far as 2026, again, California is the only one that we're in jeopardy right now of that remaining in place. They can apply for a waiver, and if they do, and that waiver is granted by the U.S. Department of Labor, then obviously things will change there. But our advice at the moment would be for everyone that's doing budgeting and planning for end of year 26, first of 27, plan on that credit reduction remaining in place. And that information will all be finalized on November 10th of 2026, and we'll be sending out an announcement along with the rest of the unemployment world, obviously, at that time as well. Again, right now we're just in a kind of a monitoring stage, making sure that, any other states that may be out there, that may be on the verge of any credit reductions based on outstanding loans, don't come into play. Again, we don't see any on the horizon today, but things can always change. One other thing that we're monitoring and continuously, obviously, is the increase in taxable wage bases. So for those of you that may be heavy out on the West Coast, especially in Washington, Oregon, and Hawaii, you'll notice that the taxable wage base out there has crept up to record numbers. I believe Oregon is over $60,000 for 2026. That is the highest in the nation in history. And so again, what does that mean to you? Well, it just means you're paying more taxes on more dollars, right? So again, it's a bottom line component that you need to focus on. Um, from a compliance perspective, again, we talk about credit reductions in California. You'll need to make sure you complete that Schedule A on the Form 940 at the end of the year. Make sure that you're addressing that separately and paying at the correct tax rate so that there's no penalty rates or assessments, fines, anything like that assigned. And then again, from a long-term outlook, we don't see any changes in California on the horizon, but if we do, we'll notify our client base as soon as we do. All right, so everybody on this call is probably asking, first of all, why would you use HRlogics? Well, it's pretty simple. Number one, as Steve mentioned earlier, we're a partner of Aqore, and most of you on this call are in some way, shape, or form associated with Aqore. So, and we'll talk about why that's important later on in the call here, but essentially, our company has been built using employees from legacy entities within our industry. As most of you know, over the years, or I should say in the past, there were a lot of small unemployment third-party providers out there that did a great job. Unfortunately, over the last decade or so, most of those have been acquired and gobbled up by the larger entities in our industry. So when that happens, that leaves a void, right? You either have to be with the largest folks in our industry or you have no other choice. So what we've done here is we've collected employees from some of those legacy companies that were acquired, and we've all come here to create a service first model to really plug that gap of service related issues in our industry so that you have an alternative now as opposed to working with one of the larger credit agencies that we compete with. Why does that matter to you? Well, number one, it matters because we've invested a great deal of money in our technology, right? As you see there on the far left, we're 100% sides integrated. Every sides exchange that is out there, we are capable of utilizing and set up to receive claims electronically. And what that means to our clients is that you get more lead time as it relates to those claims. Typically, and in the past, once a claim would get mailed from California to, whether it be Nashville, Houston, Dallas, wherever your headquarters is, it's 2 to 3 days in the mail. By the time you get that mail, you open it up and you get it out to your client, they've got 3 or 4 days to respond. If you get electronically through sides, that 10 days now becomes 10 days because we're getting it electronically in real time. So that's really important. And it's an investment that we made on the front end of our technology to make sure that we're giving our clients as much time, lead time as possible to gather all of the information related to those claims. What that's resulted in is the middle number there, $64 million in liability removed over the last 18 months for our clients. That essentially means to you that's $64 million that are not going into our clients' tax rates calculations and not artificially inflating those tax rates so that they're paying more in tax dollars out to the state agencies. Additionally, part of our process is a 90% win rate on all protestable claims, and that is a guarantee across all of our clients at any given time.
I'm going to stay on this page just real quick. So, see, from a partner perspective, you and I have been partners for about 3 years now, but
Right.
why did you choose to partner with HRlogics?
So the thing is, our software, we have the tools for everybody to handle, like I mentioned before, your whole front to back, but we're not truly the compliance part, right? That's going to require the internal staff to understand how to use those tools, what's the right way, and how to record everything. So going with a trusted partner that we can offer from a third-party perspective that can integrate with our system, get the information that's needed, and help our clients, get into winning situations like this without, again, making a big liability internally, because it's just a great move. And we do have clients, obviously, who are using this integration right now. So there's opportunity to talk to other referrals too that can say, okay, very good things about HRlogics. But it's definitely a trusted partner relationship that when we enter this, has got to be someone that we trust and that this is going to be done the right way.
All right. I know everybody on this call is thinking, why do we even have this slide? Because we deal with unemployment all the time, but this is just part of the webinar. So bear with us here for a second. So what is unemployment insurance? Well, as all of you probably on this call know, unemployment came into play as part of the New Deal in the 1940s, as a way to combat the Great Depression. And essentially, what that legislation read originally was to say that, for individuals that are unemployed through no fault of their own, can receive aid in the form of unemployment benefits, assuming that they are able, available, and actively seeking work at the time. Now, that's direct quote from the statute. However, obviously things change over time. The statute itself has not been amended, but as states take federal legislation, just like in any other case, and interpret that legislation into their state statutes, things tend to vary a little bit. But that is the overall goal of unemployment. So what we're looking at here is, for folks that are laid off from work or, they have a factory that closes, so they have no more employment available to them. Those are the individuals based on the spirit of the statute that should receive unemployment benefits, and rightfully so, they should get it. Um, what we're concerned about are the folks that essentially game the system, right? Folks that, leave a job because, they don't like the hours that they agreed upon originally, but now they're tired because they're working third shift. And as a result, they think they should receive unemployment. But the reality of it is that unless there was some reason that they quit connected to the work or were discharged due to some misconduct policy, then, they should not. And so our goal here is to, as every claim is filed on behalf of our clients, is to review those claims, review the situation in which the employee separated, and then respond to those requests for information to the state agencies, provide them full detail of why the individual is not no longer working, and then let the agencies apply the laws in those states to determine whether that person is eligible or not.
Okay,
So,
so
yeah, go ahead. Go ahead, Steve. This is your slide.
yeah, yeah,
Sorry.
so that's okay. It's going to reiterate a little things that I said when Biz asked earlier, about why with HRlogics. So complexities for staffing is much different than other corporations, right? So when you look at unemployment claims and staffing, it's not just a process problem, it's a complexity problem. you're dealing with high turnover, multiple assignments, employees who may file several claims in a year. So again, it's very different than any other industry. So the reason for a partnership, what makes HRlogics different is the depth of experience. So you guys have over 100 years of combined experience across all 53 state unemployment agency. You've seen about every scenario that's come up. So having that full integration with all states, with all state data exchange, means responses are faster, it's more consistent, much less reliant on manual follow-up. And that's really important because missed deadlines, incomplete responses, that's where a lot of unnecessary costs come from. So when you look at the outcome, HRlogics, you're winning roughly 90% of all protestable claims. I mean, that's a real difference where financial impact shows up, right? So for most staffing firms, this isn't something that's actively managed day to day. And to me, that's where the costs build in over time. Again, experience from my own staffing firm. So this is really having the right partnership and process in place makes a huge difference. Oop, did I lose you guys? Oh, there we go. Sorry. My screen froze for a minute. I apologize. So we got a poll question here, right? So do you know the full, this is for everybody out there, please, log in here and answer, but do you know the full life cycle of an unemployment claim? And as everybody's looking at this, did you guys hear me the whole way through? I didn't freeze, did I?
Yeah, yeah, we heard you.
All right,
I heard you.
perfect. It was just my screen. Very good. And
Okay.
we have results coming up. Do you know the full life cycle of an unemployment claim? The
Like we
answer
got,
is
yeah.
I've got 70% no, 30% yes.
Okay. Well, that's good news because here is a graphic that kind of explains what the life cycle of an unemployment claim will look like. Now, again, everyone keep in mind that every claim is not going to follow this full life cycle, right? Every claim's not going to get to a hearing and then get to the board of review and so on and so forth. But if a claim were to make it from start to finish of its entire life cycle, this graphic is kind of what it would look like. Obviously, it would start with the initial claim filing by the claimant, which would then require a response and providing of information from the employer or third party administrator, such as us. Once all that information is obtained by the state agency, as we kind of mentioned earlier, a claims examiner will review all of the information provided by both sides, and then they will ultimately make a determination as to whether that person is eligible for benefits or denied. Once that determination is issued to both parties, then both parties have an opportunity to review that determination and decide if it's not in our favor, do we want to appeal that determination? For example, if you let someone go due to a violation of company policy, and for whatever reason, the state agency determined that they were still eligible to receive benefits, as an employer, you might look at that and say, this is something we feel pretty strongly about that they should not be granted benefits. So we would like to appeal that determination. And you're welcome to do so. When you do that, it will trigger an unemployment hearing, which you'll see there in the middle of the graphic. And the hearing, contrary to popular belief, is not a few good men with Tom Cruise and Jack Nicholson in a courtroom. But it's more of an administrative proceeding where both parties, the employer and the claimant, show up and participate. And essentially, these days, things have changed over time. These days, it's more of just answering additional questions from an adjudicator or administrative law judge so that they can get a full picture of what occurred during the separation. Um, Once the hearing is conducted, also, I should stop and go back really quick. From an employer perspective, the most important thing during a hearing is to have firsthand testimony from your company available to participate. If that's the manager that terminated the individual or another employee who witnessed the final incident that caused the termination, you need those people present. They're going to lend credibility and information to the law judge or adjudicator that will be crucial to their decision. Once the hearing is completed, then that hearing officer will review the information and they will decide whether they want to either uphold the original determination or overturn it. And once that issue or that decision is issued, excuse me, um, again, if it's still not in your favor as an employer, you do have one additional step to the Board of Review or Commission in certain states. Now, that step is more of a brief driven administrative process. It is not another hearing. You don't have to participate, but you do need to file a written brief explaining why you are escalating this to the board or commission. And typically, you want to indicate what statute in the state law book what you feel was not upheld as a result of the hearing officer's decision. There will be a panel of 3 or 5 adjudicators that will review the case, and then they will issue a written decision again, and then that is sort of the end of the process right there. And then, of course, the last step we have here is auditing the charges, which we'll get into in much more detail in another slide. Um, so now we've kind of already talked about, who is ultimately eligible for unemployment. Again, it's people that meet the criteria that are clearly indicated in the law. And you see at the bottom, we've got the 2 main requirements there. Number one, individuals that are unemployed through no fault of their own. They did not take an action, so to speak, to cause their unemployment in translation. And then the second one, which is also an additional criteria, is again, they must be able, available, and actively seeking work. And essentially what that means is, if you're in the hospital for 6 weeks because of a broken back, as an example, sorry to put that out there in the universe, but obviously you're not able or available to work. So you would not be declared eligible for unemployment benefits, regardless of the reason that you were separated. You have to be actively seeking work, and state agencies can periodically audit your work search requirements to ensure that you are reaching out, you are applying for jobs. They will contact employers randomly as you file each week for eligibility. If you're a claimant that's on unemployment, you have to file each week to indicate these are the jobs I've applied for, these are the people I spoke to. They will randomly check those. And if you did not, then your eligibility will be suspended or ultimately eliminated, depending on, how egregious that issue is. So those are the 2 main features that will allow anyone to receive unemployment benefits. Um, One thing that is unique about staffing, which I don't have to tell you guys this, you're all in that industry already. Um, but because of the nature of your business, with the short, long-term temp to hire roles, all the different types of employment situations, um, you typically are the most complex because every termination is not going to be, we hired this person to do this job, something happened, we terminated them, end of story, right? That's your typical employee life cycle. It's much different, right? You've hired somebody to do a specific task for a specific time period and that job ends. Now what? Right? Or, you hired them and placed them at a client location, and that client location said, we don't like this person. Can you give us another assignment or another assignee? So again, these things are not standard amongst all employers, right? They're very unique to staffing. So again, your claim volume is going to be higher because it's not necessarily that your turnover is more frequent than other industries. It's just the nature of your assignments are going to generate more claim activity. And as we've talked about a little bit, every time a claim is issued, the number one most important thing is to respond to the request. If you don't respond to the request, then you've essentially lost before you even started, right? That's essentially how it works. So, and again, in staffing, claims are more frequent with between claim renewals, assignment ends, things like that. You may get 5 to 6 claims within the same benefit year. So not responding to one of those 5 or 6 may cause you to lose the claim entirely, and you don't want that. So you have to pay close attention to it. There's a lot of back and forth paperwork, and that's what makes staffing a little more challenging than others.
Hey, Josh, just jumping in there really quick.
Yes,
Just from,
sir.
again, from experience on that side, it is. So, especially on the transactional
Hmm.
assignments, right? And the level
Hmm.
of person that you're dealing with that you're putting out to work. We had that. So the minute someone went out, and like you said, it could be a variety of reasons. Their assignment ended because of a short-term assignment. The customer wasn't happy with it. They weren't happy with it.
Hmm.
And then that claim comes through. now we're scrambling. Did anybody reach out to that person when that assignment was done? Was that
Hmm.
documentation in there?
Hmm.
Did that person's phone number change? So, like you said, the minute that you drop the ball in it's a pressing issue, and it comes up in staffing so quickly. Very hard to manage.
Hmm. Um, all right, so now we're going to talk about how do we determine what benefits are payable to claimants, and then how are employers, held liable for those benefits. So the chart you see at the bottom here, this is what we refer to as the base period. So the way unemployment benefits are calculated is when an individual is found eligible, the state agency will then look and say, how much money have they earned during their employment, maybe one employer or multiple employers, during the last 18 months from the day they filed the claim. And that's what we call the base period, is that 18-month window. And so you can see right now we're in quarter two. So we're the second line down. So if the claim is filed in quarter two, then the wages that will be used to assign their monetary eligibility, as we refer to it, will be wages paid in first, second, third, and fourth quarter of the prior year, which would be 2025. And so you can see there's a gap quarter there, right? First quarter of 2026 doesn't come into play there. Now, some of you on this call, and I see a couple names that I'm familiar with, you're going to say, well, Josh, what about the alternative base period? That's not true. You're right. You're right. I'm just trying to keep it simple. But there are states who say, as opposed to this model that you see here, if they don't earn enough wages in that Q1 through Q4 period, their law does allow you to look in the first quarter of the current year to say, does that help them to be eligible? And if so, they can file what they call an alternative base period claim. I don't want to get too technical into that because that again, that's the minority of things. But so that's how we determine, or the state agency, I should say, determines how much the individual, the claimant, is eligible for in benefits. And then, of course, that number also equates to the employer as to if you were the only employer that paid wages during that 4-quarter period, then those are the amount of benefits that can be charged to your unemployment tax account, which again, anytime benefit charges are assigned to your tax account, it has a negative impact in one way or the other. So you don't want that. So, all right, now we're to a poll here. Let's do this.
All right. So how many of you, I should say, completed an audit of the charges to your unemployment account? How many of you completed an audit of the charges?
I'm going to guess this is low.
I'm going to go with you on that. And by the way, any questions, obviously, you can put into the chat too as we go along here, right?
I, I'm assuming we can.
Okay, very good. All right. So
Oh, I was wrong.
we got the poll. Yeah, the answer is
Mm.
54. Yes,
Hey,
46. No.
congrats to that 54%. That's solid.
All right.
All right, well, since most of you have done that, we're going to get into that here in a second. So basically, like we talked about earlier, with all the volume of claims, especially in the staffing industry, what happens when you don't respond to a particular claim? Well, obviously there's one major thing is, you lose that claim majority of the time. And there was a U.S. Department of Labor study that was put out in the mid 20 teens. It's no longer available on their website, or I would reference it specifically by link. But um, that study indicated that for tax-paying employers in the unemployment industry, or in the unemployment system, for every dollar of benefit charges that are assigned or assessed to your tax account, you will pay $1.29 in future tax payments. Now, you're going to ask me, why the 29 cents? What's that all about? Well, every state has some type of additional surcharge, assessment, social cost added on or tacked on to their initial tax rate calculation. So if your tax rate in Georgia, for example, is 1%, then you have a 0.04% administrative assessment. So your total rate is 1.04. So every state almost has that as part of it. And why do they do that? Well, the reason they do that is because there's your benefits that you have to pay for, And then there's a bucket over here of companies that went out of business and all of their employees became eligible for unemployment, but they didn't pay any more taxes because they're no longer a company. So somebody's got to pay that too, right? It doesn't just go unnoticed. So they have this assessment or these surcharges built into their rates so that active employers who continue to pay taxes can also make up for the shortfall of companies that go out of business and so on. Now, one significant thing to know here is again, every time a dollar gets assessed to that tax account and then you have to pay out those future tax dollars, that's a finance issue for your organization, right? That's an OpEx problem, right? You're paying out more money, you got less money to do the cool, innovative things that you want to do as a business. So there's something that compiles that or compounds it is there's inaccurate and improper charging by the state agencies, which they frankly admit to. And so if you're already paying $1.29 for every dollar you pay out or you're charged in benefit charges, and then a state like Florida admits that they have a 36% error rate in charging, well, then it's a double whammy, right? You're paying out more taxes and you know Florida's made a lot of mistakes. So I think that leads us into the next slide, maybe. Hope it did. So these are the maps that talk about those error rates. Now you can see prior to COVID, life wasn't too bad, right? We only had a handful of states in the red. Everybody else was doing pretty good. And then of course COVID hit, and if any of you were in the unemployment world during COVID, bless you. And glad you're still with us. But that was a hot mess. But as you can see, even in January of 2025, which is the most recent study that we have, things haven't really improved. And there's a lot of reasons for that, right? State agencies have old and antiquated systems. They're not able to really keep up with, the fast-moving world. Steve mentioned earlier, the introduction of AI, and that's pretty much all you hear every day now. Obviously, no state agencies are utilizing that as a tool these days, and so they just continue to get further and further behind without the funding, whether it be from a federal or state level, to improve their systems and try to eliminate some of these errors. So again, when you're paying a lot of tax dollars out due to errors that state make, those are monies that if you're managing the process properly, you can avoid some of that. And that's what having a third party like ourselves, or if you've got a strong internal team, obviously, and they're doing those charge audits like 54% of you mentioned, hopefully you're catching some of those errors and you're able to recoup that money in the form of credits. So again, 54%, I feel antiquated here by even talking about this, but what is a charge audit basically? And what that is that every period, whether it be monthly, quarterly, or even annually in some states like California, you as an employer will get a report from the state agency that says, here is a list of all the claimants that we paid benefits to during that period, and this is the amount that we paid them, and this is how much is going to be charged to your tax account for your future rate calculation. So again, those numbers will equate into future tax payments for sure, right? Because again, any benefit charge assessed has a negative relative impact to your rate calculation. But additionally, with those error rates, if you're not reviewing that statement, then you're just making the assumption that the state is always right. And again, by the slide we saw before, that ain't the thing. So what you want to do in a charge audit is you want to look line by line on there and say, okay, here's Steve. Steve was eligible and it got $5,000 in benefits. Well, the question I would ask you is, do you remember if you won the claim against Steve or not? And if you did win the claim, then my next question would be, if you won a claim as the employer, why did this person get benefits? I mean, theoretically, they shouldn't, right? So then you've got an inquiry or a protest back to the state agency to say, hey, this doesn't look right to us, right? We won this claim, we went to the hearing, all the things, and we worked really hard to win it, and yet by the charge statement, we basically wasted our time. And so that's essentially what a charge audit is going through that statement line by line and then protesting what you would consider erroneous or any unwarranted charges that are being assessed on that account and having the state respond. And as we all know here, state agencies are not the most efficient groups out there. So what I would suggest and what we typically do is submit the initial protest, and then there's a whole host of follow-up that you'll need to do in order to officially get a response and then ultimately, hopefully, close that case out by receiving the credit on a future a charge statement down the road. But again, that takes a lot of persistence and a lot of effort, and not something that people always want to do or spend a lot of time doing. You'll see on that third column there. Sorry, Biz, I just meant to mention that. As part of our process in auditing charge statements for our clients, we've had almost $100 million in charges removed over the last 5 years. So that's, we take great pride in that. We've got an entire team that works on that every day, all day. And so that's something that we really want to make sure that we're capturing on the back end for our clients and that they're seeing a solid result there. Oh, this is me too. You guys are getting a lot of Josh. I apologize. So again, we've talked a lot about tax rates earlier. Every state is going to issue a tax rate to a tax rated employer at least once a year, typically on January 1st. The only four states that don't follow the calendar year rule are the four that you see flagged there: New Hampshire, New Jersey, Tennessee, Vermont. They're on what we refer to as a fiscal year calculation, which is July 1 through June 30. Um, that tax rate is calculated using multiple factors, depending on the state. Every state's calculation is slightly different. The one consistent factor in every calculation is benefit charges. And that, again, is why it's really important to focus on the claim activity and the charge audit process, because regardless of what additional factors every state uses, whether it's total taxable payroll, whether it's average taxable payroll, whether it's reserve balance, tax payments, again, that's going to vary from state to state, but charges will always be a portion of the calculation. So if you can audit and, confirm that that number is accurate, you're one step closer to making sure that you're paying at the right rate. First of all, your rate is not overinflated due to any issues that may be out there. And again, that also assures your finance and payroll tax teams that your rate is as low as it should be based on every factor that you're aware of. And ultimately, that's the goal, right? You're never going to be perfect from a tax rate perspective. You want to just make sure that you're paying at the correct rate based on the experience and claim activity that your company has generated. And then, oh, this one's me too. Okay, let's do it. Um, so again, we've talked about all these things. This is just a quick summary of how the process works, and again, especially for the staffing industry. So efficient claim tracking. you know Maybe some of you right now are using spreadsheets or something to that matter, tracking your activity. It's awesome that you're doing that. I would urge you to look at a tool, right? Whether it's our platform or others that are out there. There are tools out there that are much more efficient at it and can help you link the claim activity to the charge auditing and I'll make a connection to all of that in a more efficient and automated way. Another benefit of having a third party provider like us is, again, that state specific experience. As I mentioned, 23 years myself in the industry. Joe Turner, who's our VP of operations, 27 years in the industry. Holly Poulos, our director of administration, 22 years in the industry. A lot of people with a lot of years, seen a lot of things, as Steve mentioned earlier. So very rarely do we come across something where we go, gee, none of us have ever seen this before. It's just not a thing. Again, the ultimate goal here is that your company saves hard dollars, bottom line numbers. It's great to win every claim. That's always awesome. But if winning all of those claims doesn't lower your tax rate, then the question should be, what are we doing this for? Right?
It,
How are we really saving money?
there's actually a question that came in here too. So
Oh, cool.
yeah, someone's asking, Jeffrey Axis. So do you protest an unemployment insurance claims related to staffing whenever a worker does not contact the agency for a reassignment?
Uh, Thank you for your question, Jeffrey. I think I think that's going to need to be client specific or employer specific. A lot of times that's going to depend on your policies have in place. Most staffing agencies that I've worked with in the past will have a policy that indicates if an assignment is ended, then the employee is required to check in, whether it be periodically or initially for additional assignments. And if they fail to do so, then you have a protestable issue, right? But if you don't have a policy that outlines that and they don't check in, then you don't really have much of a leg to stand on because their assignment ended. You didn't offer them any additional work. There was no requirement for them to check in. So then where do we go? Right? So one of the things that I'll add to that is whenever we bring on a client, one of the things we like to do, especially in the staffing industry, is review some policies, especially as it relates to that, because we want to see what you currently have in place and try to help with suggestions and maybe some changes so that you've got a little more teeth in that rule. So when those do happen, we've got a leg to stand on in a protest situation.
Very good. That's the only question for the moment.
Okay, these are a couple of cases that have been in the news over the last couple of years. So we wanted to highlight these. Again, we talked about some of the erroneous charges and things like that that the states admit to. But there's also a ton of fraud that continues to happen in the unemployment world, and that's really unfortunate. But it's also indicative of essentially any government program, as we all know. But these are just a couple of articles that, I've run across personally over the last few years where, folks are committing fraud or scam against the unemployment trust fund. And, they've actually been indicted and arrested for those things. So, we hope that we'll continue to see more of that, but that's a reality that, we'll always have to deal with. What makes it important again is, as every claim is issued by a state agency, obviously the state agencies aren't going to research these things deep enough to determine is this a real person or is this a legitimate claim before they issue the response or the request to the employer. What's important again is like if you're responding to these claims or you have a third party like us that are responding to these claims, that we're looking at each one of these and we're being objective, right? It's not about personal relationships as much as it is, we just need to understand what what the situation was. And if this person was never employed by you, then we need to report that back to the agency so they can do further investigations. And unfortunately, when a lot of these fraud and scam issues come up, it's essentially because employers, either didn't respond to the request at all or didn't respond with very much detail. So it gave the state agencies no indication as to how to investigate further or review, and then they simply just granted benefits. So again, that's something that we want to continue to pay close attention to because that's a really important piece of the puzzle. Yeah, so as we kind of talked about multiple times here, one of the things that we want to, say here is that our platform, funny enough, was created for the staffing industry. Our original owners of the company actually owned a staffing company at the time. And so when they built this platform, it was originally for them internally to use and to manage their own unemployment. And then they've realized, rightfully so, hey, this is a pretty good platform. Maybe we should offer it to other clients and other opportunities. And so they did. And so what's come out of that essentially is, award-winning platform and service team. This was our eighth year of winning the Outstanding Performance Award from the Sides Committee, which, we're very grateful for. Being the first TPA that was integrated with all of the six current sides exchanges. That's really important to us. And again, just a continued investment into our technology. Our platform updates in real time, which I think is really important for visibility and transparency to our clients. And unfortunately, not a standard in our industry, which is kind of crazy, but that's the reality of it. Again, with that transparency just comes all kinds of viewpoints for our clients. If you're a client of ours and you have access to the platform, you essentially see everything that we see, which again in our industry is kind of unheard of. A lot of things are gated for certain purposes, but we don't believe in that. So we have everything out there. And again, part of our associations and things like that are being on the sides boards, being part of other associations and partnerships so that we can continue to stay plugged into everything that's happening legislation wise, but also through technology industry so that we can be on the forefront of all of that. Um, in our industry, I mean, there's really three different ways that you can manage an unemployment process effectively. One of those, obviously on the left there, is a full service solution. That's what folks like us and other TPAs in our industry offer, where it's essentially we have limited power of attorney. We represent you almost as if we are an attorney, and we stand in your place as it relates to the unemployment process. We receive all documents, we respond to all documents on your behalf, and then we coordinate with you as additional information or participation is needed, whether it be on the claim filing, hearings, etc. Um, Other alternatives could be, using a SaaS platform, using our software as a tool, managing your own claims, but using our platform so that you've got that visibility and transparency across your industry or your organization. And then, of course, the third one would be, using your team and using it your thing, your group in-house. Again, all three are very good options. It all depends on, from your organization, what you're looking for, what type of team you have internally, what, how up to speed on unemployment they are, and as usual, bandwidth, right? I mean, if the folks on your team have 10 other responsibilities in a given day, unemployment may or may not be at the top of the list, right? So if that's the case, then maybe outsourcing is a proper tool for you so that you get the right amount of focus on that. Um, and this slide here will really just kind of give you more indication of, the benefits slash pros and cons, I guess you should say, of each option based on, what you're looking for specifically.
And this is usually where everybody's like, oh, let's see the demo, let's see the demo. Well, this is information being passed back and forth. So there's nothing too flashy to show here to everybody. What we can guarantee is that's a very seamless API that's built between Core and HRlogics. So the API, just from a weekly standpoint, the payroll data is going to go through the assignment data and all the employee information. So it's going to funnel through to HRlogics via the API. Then from HRlogics, the response to the agency, the state UI, and then back for the unemployment claim request info to HRlogics. So it is a very seamless, simple integration. Just kind of going back to echo what you were just talking about there a minute. That's not really one bad way to do this, right, Josh? Whether you're using third party or trying to manage, it's tough. And I think it's always one of those things where you put off and good intentions are, I'm going to get better at this. And the realization as we take on so many more things that it kind of goes to the wayside. So just from a simplistic standpoint of making your lives easier and not missing out on things that you can control, which is not hitting those claims and making sure that you're doing everything from a compliance standpoint. It's a very simplistic and very effective tool to use within the Zenopal system.
I'll just add one more thing to that. So we have one integration that supports multiple platforms at HRlogics. So not only does it support your unemployment claims management, but it also supports your tax credits and wage verifications with one file. So we take care of all of that with Aqore so that you don't have to worry about building anything yourself.
All right.
Full question.
Here's a big question. Do you want us to contact you with more information about this? I know the answer.
Absolutely, 100%.
Yeah. As we're waiting here and looking at this question, but are there other serious questions that anybody has here that you've seen? There's a big presentation, a lot of good information there. Thank you, Josh. Thank you, Biz.
Yeah.
But seriously, if there's any other questions here that you have and what you've seen so far, or things that you're wondering about that maybe you haven't seen in here, you can throw them right here in the chat, or the QA is open here as well.
Yeah, and I've got a couple of questions that came independently to the chat to the panelists, so I'll review a couple of those as well in just a second. Go ahead and end the poll. And so we've received a few questions, but like Steve said, if you have additional questions that you'd like us to review, please throw those in the chat. It's not too late to do that. But you can also, let's see, let me go here. You can also scan the QR code if you would like to chat with Aqore further, or if you would like to chat with HRlogics further as well. So just scan the QR code. It goes directly to our contact us page, where one of our reps for the corresponding company will get back in contact with you. So with that, let me review a couple of things that came in independently. So um, I think we already went through this one, but how do I know if I have an erroneous charge on my unemployment claim?
Yeah, I mean, yeah, the easiest way there again is to cross-reference those charges based on the claim activity that you've recorded, right? And so again, if you have that claim as you received a determination indicating that you as the employer won that claim, then you shouldn't be charged, right? So that's one indication there. It could also be that, you never received a determination, so you still have the claim marked as pending. You'll want to follow up with the agency to find out why a determination has not yet been issued. Maybe it did get issued, maybe it got sent to the wrong place, you never saw it, those kind of things. So yeah, there's a lot of different reasons that these things could fall through the cracks. But again, just asking the questions to the agencies anytime you can't 100% confirm that the charge is legitimate and warranted, that's where you start. And then after that, again, you'll win some, you'll lose some, but at the end of the day, you'll prevent some, if not all, of those errors coming to your account.
So there was a follow-up to that too. So if I find anything, what actions do I need to take?
Yeah, great. Like I said, it's kind of the old see something, say something, right? So, what I would advise is if you do, contact someone at the state agency, ask them, number one, you could try to resolve it over the telephone if it's a simple issue, or most typically what you're going to do is create what we call a protest letter and submit that protest letter to the agency. And once they receive it, just like anything else, it'll go in a queue. Someone will process it, and then they will issue a response or determination to that request. That's typically what we would do.
Okay. Congrats on achieving Outstanding Performance Award for the eighth year in a row. But what does that actually mean?
Yeah, I mean, I will say on this part, I give Joe Turner, our VP of Operations, and the entire team all the kudos. I did nothing, first of all, to get that award, but the team earned that. And what that means is that any third party or employer who works with the sides connections, in order to win that award, you have to respond accurately and timely to 99% or more of all requests that come to you in a given 12-month period. So you're essentially leaving 1% potential error rate out there in order to qualify for that award. So there are a lot of TPAs in our industry that do not win this award. So, and there are many reasons as to why they don't. It's not that they're necessarily bad at it. It's just more of there are a lot of things that go into being able to meet that number. What we've done internally is put a lot of reinforcement uh, procedures in place to ensure that we are responding to every claim that comes in the door, whether we have every ounce of information that we need or whether we have very little, just compiling something to make sure that we get a response back to the agency timely and uphold our protest rights of our clients is really the key there.
So, what associations are you involved in to stay up to date on UI laws, both benefits and tax?
Yeah, so our three largest partners today are unemployment and workers' compensation, or referred to as UWC, NASWA, which is the National Association of State Workforce Agencies, and AUTO, which is the Association of Unemployment Tax Organizations. So many acronyms, right? Those are the three organizations that we are currently members of. And again, as you can hear by the names, one is very tax centric, one is state agency centric, and the other one is more claim and statute driven. So between the three of those, we feel like we get a good mix of updates and are connected in several different ways so that we can stay on top of everything that's going on. So I would certainly urge a lot of you. Doug Holmes has been with UWC for, gosh, as long as I can remember. A great guy, works on Capitol Hill lobbying on behalf of employers and TPAs as it relates to unemployment legislation at the federal level. Great contact to have. I would encourage everybody to, be members of them. They get a lot of great information out. Um, and again, NASWA as well. I mean, they're a government organization. They're free. You don't have to pay to be a member of that. But again, they're plugged into what each state agency is doing. A lot of states right now are what they call modernizing their external web portals for employers and TPAs to use. And so being a member of them, we get up close information as to what to expect the next 3 months, 6 months in some of these state portals, and really stay ahead of the game there. So yeah, those are the two, NASWA and UWC. I would urge everybody on here to sign up and be members of those organizations. They're relatively inexpensive. UWC is relatively inexpensive, but you get a lot of solid updates from Doug and team on a consistent basis.
Awesome. Well,
And
that
by the way,
concludes
we
our.
didn't get paid for that UWC plug, but I love Doug, so I want to throw that in there.
Oh, that concludes our Q&A portion of the webinar today, but you can catch HRlogics at our upcoming webinars. So on April 30th, you can catch Brian Ray and myself as we highlight a refund from the IRS that you may be owed. During COVID, the IRS declared a nationwide disaster that legally extended filing deadlines. However, its automated systems continue to assess late filing and late payment penalties along with interest. Surprise, surprise. Did you or your business pay a penalty between January 10th, 2020 and July 10th, 2023? If so, you may be eligible for a refund, and you should definitely tune in to see how to find out if you're eligible or not. We'll also have our next Ask Me Anything series, which will be on May 21st at 3 p.m. We'll bring in Melissa Prentice, president of HRlogics I-9, Form Compliance and Complexities, and Audit Readiness to Onboarding Workflows, Remote Verification, and Evolving Regulatory Requirements. No topic is off limits, so no slides, presentations in that one. So come with your questions ready, and she'll get to all of your answers. So you won't want to miss either one of these events, so scan the QR codes to register now. But with that, our webinar will conclude. So please scan this QR code to complete a brief survey. By doing so, we can ensure we're bringing topics that are important to you to the forefront. Thank you everyone for joining us today, and have a great day.
Thanks, guys.